Hey guys, welcome back. Hope you had a good Tuesday, August 3rd in the market. We're gonna talk about my bearish plays for market correction, overall market, SPY, GME. What happened here at the end? What made this happen on GameStop? Sub up, like up, comment down. Happy money sticks around. Follow us on Twitter, and we have a Discord you can get on as well in the description. Oh, what a fun day. So GME's been selling off. Okay, not selling off. No one's selling again. GME has been coming down from hedges and manipulation and short attacks on zero volume. So yeah, I had a bearish setup basically back here somewhere, and we made some money with puts, and now I think this possibly is 148 could be the floor. We're gonna talk about this price action at the end of the day, but yeah, I drew a line basically from the bottom, the low that we hit today, and it lined up pretty good with supports back here. 426. This was pretty close on 513. We've got this little one right here at 423, and then back here it's actually resistance, like perfectly on that candle body on January 26th. So that support and resistance line is a pretty good one. I could see it holding that, or it could keep coming down to that 135. But yeah, the fact that that is a pretty solid support from before. And also one other thing, if you take out the last 10 minutes of the market and you just look at today, without that, it's gonna be hard to see with my position there. We've got a RSI divergence on the hourly, and I think it's probably a stronger indicator on a longer time frame like daily, but yeah, it's here on the hourly. So we've got a 25.81, which says right here the number on the RSI, 25.81 here on this low, which was this low, and then if you come down to this one, it's 27.10. So it's a lower on the RSI. Wait, what? It wasn't that way before. Oh, 25.81, yeah. Oh, sorry, higher on the RSI, lower on the strike. So we're looking down here and then here. So there's the divergence. RSI is going up on the lows, stock is going down on the lows. So that kind of made me think, that was one of the things that made me think this is could be a bottom and reversal. And then today's candlesticks on this same hourly chart, there's small bodies and bigger wicks. Sorry, it's kind of hard to see. Which is also another sign of kind of a reversal. So if you don't look at that one, just that. So not to mean it's just going to rocket up from here, but probably bounce from here and consolidate some more, and then find a direction, maybe down more, maybe up. But I think it'll probably be up after we find a floor again. And yeah, I kind of thought it was back here, and this support got taken out, and that's when actually I got puts, was on this day once we dropped below that support. And I thought it'd probably come down a little further, but today, just based on those couple factors, I'm thinking less that it's going to come down further, and that we will probably respect this support and trade in this range. What happened at the end there, though? It's funny. I've been waiting all week, at least since it's been announced, which I think was a week ago. GME's going from Russell's or S&P 600 to S&P 400. We saw it go from the Russell 2000 to 1000 or whichever it did, and this exact same thing happened. And not only did I not prepare for this to happen, I even forgot tomorrow was that day. I remembered it was the Ethereum day it was talked about, and I wasn't, you know, that could be news, it could not be. So more than likely it probably won't be. And the rebalancing, I also ended up seeing a lot more bias towards it actually being a net negative, basically rebalancing. So they'll have to sell some shares to move over. I didn't look into it too much in depth, but that's what it seemed like. I'll just kind of wait and see. But I don't think it's going to be a huge rocket ship from that itself, from the ETF changing. However, when we went from the Russells moved Russells, this exact same thing happened in the last 10 minutes. And I can't believe I could have made a lot of money just on this move, just from knowing that this was going to happen with options. Oh my gosh. I mean, people that like do this for a living and stuff, they've got to make a killing when they are anticipating a move like this and they are almost expecting it. This is like clockwork with what happened before. So that's probably why it dumped this time. I think last time it didn't dump. It just went up and then closed up there. When I saw this happening, I was like, oh, okay, maybe a little failed deliver, a little covering, something, you know, this is that little glimpse into the matrix of the hedgies, basically seeing behind the curtain that we see pretty often with GME that gives me confirmation bias, or confirmation rather, that this thing's manipulated and I'm on the right track. And so I thought that's what I was seeing here. I was like, wow, this is pretty sick. So I actually got calls. So I was like, okay, this is maybe the start of it, start of something. And then about up the top, I remembered, I was like, oh my gosh, this is the rebalancing. Anyways, I got time on my calls. I'll show you what they are. They're still good. I'd actually tried to sell them back, but it had already started going down. So I was like, all right, whatever. I want to show you the other time it happened. I think it was June. They said the end of June. This is right here. Yeah, it was this. See this day? So I think there's different theories on what's going on. It's possibly actually physically rebalancing. However, I've also heard that rebalancing happens in the extended hours, and that this price action towards the end is actually just people trying to front run it. So traders, I don't know, institutions, whoever, trying to front run the rebalancing. And so we saw that same thing happen right here. And see how this one closed up higher. I think this was the day, June 25th. Oh, it was into a Friday also. So we saw that here, and that one actually closed high. Today, it kind of dumped back down. But it doesn't mean that it's going to continue, as you saw here. It could, but it definitely didn't here. And probably won't here. But I think just without that as a part of it, I think we found a nice floor for now. And it might be this kind of thing where we find this floor and it consolidates for a bit or a day and then continues up down. We'll have to just kind of keep an eye on our indicators. We did turn bullish for a bit on the hourly, and then just with that kind of dump right after it turned back bearish. So on the moving average convergence divergence chart, we haven't turned back bullish on the hourly at least, and on the daily we've been bearish for 4 days now. So it has some momentum on the downward way, so expect it to kind of slow down, and then hopefully rally, basically. Just so you understand, I had puts, I sold them, so that's basically my conviction that this could be a floor, because I made, I don't know, some percentage, 80% or something on them. Sold them because I don't think it's going to necessarily come down anymore. And I also had covered calls that I sold. We'll get in that in a minute though. S&P, man. So European closed. I was coming down, and then European closed, and we just ripped. I drew this line up here, and I drew this line here when we were trading back here. And just because I wanted to look back. Remember how I was saying there's a head and shoulders? I thought this was a shoulder, this was a head, this was a shoulder. And so I drew back here on the top of that shoulder to see what we do up here and see if we would hit that as resistance. And it did. It kind of broke through it. So really just in that last 5 minutes. So it's not a real strong breakthrough. Might be just kind of wicking out of there. So I still think this is probably a head and shoulders formation, which would mean we'd kind of keep coming down and we won't hit new highs. And yeah, that's kind of what I'm thinking for now. On the daily, on the MACD, it's just tapering back and forth. It's bearish, bullish. It's really just flattening out. And why I think this possibly could be a different top than we had back here and right here, and all these kind of fake tops where it kind of just get volatile, drop and just be volatile. This one is happening a little different, as you can see. It's topping and it's kind of flattening out. So that makes me think this is possibly a proper top. Not to say it can't just flatten out and then keep rallying. It certainly can. But with all the negative news catalysts that they can use to basically use an excuse as, oh, why the market's selling off for the news articles, I think that they are poised to now drop it. And the fact that it's basically looks different than it was back here. These were just fake. These are just bear traps, bear trap, bear trap. This seems a little different to me. So that's why I'm rolling over call credit spreads and bearish plays on the SPY as much as we need to. And GME, that support line looks good. If it comes down even more, you know, it's even a better deal. We're closer to we're actually a little bit closer now to the long term, the 180-day moving average, I think. Or maybe even about the same actually as we were back here when it was 40 bucks. So at the very lowest, I don't think we'll be crossing over. If this thing keeps selling off, if it keeps dropping the price, I don't think we're going to have a 9 moving average, which is this one, cross over bearish between the 180. At the lowest, I think we'll come down to the 180 and it'll consolidate and or bounce off of that. So that at this point would put us at 133. I was kind of saying 135. Right now it's lowering. So as we come down, this will flatten out too. This moving average, of course, it's a moving average. So yeah, that's kind of the low I'm seeing is this 180 moving average, which is those become support and resistances, the moving averages, and kind of trend lines and that sort of thing. So it's still bearish on the MACD, still bearish on red candles under the 9. These candles are pretty far stretched from the 9, so I don't think it'll keep going, kind of stretching away from that. And that's kind of evident in the RSI. It's 32, which is extremely low. It's not completely oversold into the 20 or under 30 range, but yeah, it's basically a great deal to buy this stock right now. Our option plays. Here we are. We are down. You want to hear this? Down almost 100,000. That's right. Almost 100K on our. Basically, it's mostly GME, but it's not all GME. Set up actually quite a few different plays today. So we had the American Airlines puts that I got yesterday, and these were up like 80% today. So I sold 13. I have 8 left, and I made those free. So now these are actually down a little bit. These are just weekly ones. $19 puts. With the new COVID, with the market correcting, typed in COVID. That's an easy, kind of an easy one to have bearish, as well as the chart looked bearish to me. I kind of caught it early though on the bearish on the chart. Today actually just barely crossed over bearish on the MACD. This big wick makes it seem like there's support, but yeah, I'm not sure. It's kind of, see how it's wanting? This is what I'm saying about the moving average. See how this one doesn't want to come below the moving average. So we'll see. This one, it could hold up. And that's why I sold those puts. I bought puts, made them free, and I have exposure if it wants to keep selling off. But for now, these are free, and then also we have this call credit spread, and it has to basically, American has to close below 20.5 for this to expire worthless on Friday, and then we'll keep that credit up to 20. So that play looks like it'll probably work out. CFLT, the calls that we bought that I mentioned, this is kind of an earnings run up. These are up 30%. I had a pretty big swing today. Rocket, let's see. Okay, so I did a calendar spread, which I haven't done on purpose before. I've done on accident, I think. Oh, what? Oh, it's just a big spread. Did a calendar spread on Hayward. The timing was awful, so it's not going to look good, but I have calls for Hayward, and they were supposed to cover earnings. I thought earnings were going to be good. Earnings were pretty good, but not as good as I was hoping. So my calls are here. They have 73 days till expiration, and cost 400. And then I sold shorter term calls at a lower strike. I messed up on it. I shouldn't have sold them this close to the money, and my timing on it was terrible. As you can see, they're down 75%. That's also because there's a big spread, but yeah. Hayward's a pool company. They make pool parts, and on the daily I'm just seeing like a triple top. It's just not looking good on the chart wise. I'm still bullish on this, but today when I sold that call, I think it was literally like right here at the very bottom. But today, yeah, right here at the very bottom, then just rallied after that. So it might actually have a positive earnings continuation from this, which wouldn't be good for these calls, because calls that you've sold, you actually have unlimited losses to it potential. But I've got calls I bought that cover it, so I could close a whole position out. However, yeah, at this point I'm down on the calls I sold. But if Hayward closes below, wow, yeah, I got 20 calls. I don't know why I got them so far. I'd really jack that up. Anyways, a better play would have been if I timed it right and then I got calls maybe for $28 or something further out the money where I had a little more headroom, and then I could have collected the premium on it. I wondered why the premium is so much. I just messed up on that one. Then I could have collected the premium on it and possibly made the calls that I bought free, because the premium I paid for this one to buy the calls was $400. The premium I received to sell the calls was $960. So typically it wouldn't be that high, but I sold these way in the money, and I should probably get out. There's a big correction though. Hayward probably come down with it, so no big deal. I got Datadog puts as well as Zillow puts, and sold to close SPX. Did I do that? Guess I sold to close SPX. Not sure what that one was. Oh, I had SPX that expired today. So Zillow as well as Datadog are both have pretty high profit to earnings, or price per earnings, have a high ratio of price to earnings, and those are going to be the ones that correct the most in a market crash or correction. People want safety, they want value, they want something that has actual value and not just hype. And as much as Zillow and Datadog are both great companies and have actual value, their earnings are basically, or the price of their share price is priced so far into their earnings that it has a bad ratio to their market cap, not just the strike price, because it has to do with the float and how many shares are traded, right? So that's what a high PE ratio is, and Tesla's had it for forever. It's finally come down some because it's sold off some, but Zillow has it. I think it's 100 something. It depends on if you're doing a trailing or if it's just based on last earnings. Zillow's is high. Datadog's is really high. I think it's like in the 1,000 something. But Datadog's looking really strong. They do have earnings, so I'm expecting potentially them to sell off for those earnings, which is on 8.5. They've kind of had a resistance up here and it's coming up to it again, so hopefully that will trigger it to correct, as well as with the rest of the market, as well as with things that are overvalued. So got puts on Zillow as well as Datadog. Datadog, I got $75 puts for September 17th. So 75 right here. So if it holds support at 70, these will be in the money. That's kind of what I was thinking with that. And just depends on how fast it gets there and how far down it goes. Could go down to this 50 support. We'll see. And then Z, I got $65 puts for, I think, same expiration. Yeah, September 17th. So here's kind of, let's see, 63 or so. That was kind of my thought down here. So we'll see. Those are my bearish kind of tech type high valuation plays for a market correction. Instead of just playing the SPY, I mean, the SPY is good, but it's not going to move as much as individual stocks. Yeah, so AAL, GME, okay, so yeah, I bought those GME calls when it was running up, unfortunately. Big spread on it, but yeah, I got 340 calls for August 21st, so 17 days, 2 weeks out. I still think we could see a squeeze by then, or at the beginning at least. I'm hopeful for next week still. Can't remember all my reasons, you have to watch my other video, but hopeful for next week. A lot of it has to do with TA on next week, and as well as impending doom on the rest of the market. SPX call credit spreads, these things were up 30% today, and then the market rallied after EU close. See what happens tomorrow. I might have to roll these over again. And there's the GME doing some rebalancing. That's what I got for you guys. Thanks so much for watching. Sub up, like up, comment down. Happy money sticks around. See you tomorrow. Peace out.